Good afternoon, this is Pat Walker at MissionWinners.com, and I'm just catching up with a little bit of work here on a Sunday afternoon. Got a key list coming out later. We'll do some scanning. Got a list together. We'll do some scanning, and had a question here from Theresa, and I think it's a good question. It said, Pat, and by the way, all questions are good questions. There are no bad questions. So please ask questions. I take it very seriously. This was a question from Theresa. And by the way, I'm only going to use your first name, no last names, out of respect for privacy. This is a question, and here's what it is. Pat, you recently tweeted about selling into strength. How do you know when it's time to sell? I have recently bought a couple of breakouts on volume that by the end of the day had reversed and were losers. I know how that is. In this market environment, what is the best way to determine when to sell and when to hold on? Well, Theresa, you bring up a great point, a great question, and there's a very profound portion in your question, and it's this. I like this. The 4 words, in this market environment. In this market environment. One of the things we have to do as investors and traders is always determine what kind of market environment we're in. Let's show us a difference here. This is a trend. This is where great money is made. Right here. You let them work. This is chop. This is chop. This is awful. This is chop. What do we do in chop? We have 2 choices. Choice 1 is not buy anything. Choice 2 is to buy, but we do 2 different tactics related to that. Number 1, we buy less shares, and 2, we sell a lot faster. When it's like this, you try to hang on. When it's like this, I'm either out or I'm out of portion of my shares quickly. So what do I look for here? By the way, there's the spiders. Here's SSO, same situation. Here's the Qs grinding on up, and then you get this whippy action here that'll just tear you apart. So what do we do there? And I'm just going to stop with, to me, those are the big markets, okay? The S&P 500 and the NASDAQ 100. What do we do? And it's very simple. What I want to do is, and I'm going to enlarge this chart again, I will watch the action, like right here. Let's see, right in here, if we had this, all right, what are we going to do? We are going to be quicker to sell. Why? Because of the market. The market is not good. I'll keep it clean. The market is not good. So we will take some shares off much faster. What do I look for? And I'm going to be specific with you. I will watch the market action during the day. See right in here? See this day right here? Remember that. 417, 418, 419. 417, 18, and 19. Here's QLD. 417. 418. 419. So you got the stock going up. You got the market going up a couple of days and then dropping. When I start to get action where it's stalling and it's going up on low volume, which it was right here, I am going to be quicker to take, here's the stock now, quicker to take some into strength. What will I watch? I will watch the daily chart in relation to the index, but also I will take it down to an hourly chart, and I will take it down to a 30-minute chart. Same time frame here, and I will watch it, but I will, normally what I'll do in situations like this, watching the price action, and I'll even take it down to 10-minute charts. And if I start to see a reversal ball forming, I will take off. Normally what I'll do, and you've seen it, take the shares off in 20% increments. I realize this, and the easier everybody accepts it, the better we'll all be. I'm not going to get the top. I'm going to sell up here. I'm going to try to make something along the way, factoring in the market environment. I will look at hourly, 30-minute, and 10-minute charts and just sell some off in 20% increments, looking at those time frames and looking at weakness in those time frames. But there's another variable, important variable. I will also sell some into strength. I will not wait for the weakness to come in. You could say, well, why don't you wait for weakness? in this kind of market environment, by Jove, it disappears pretty dang quick. I mean, look at this. It would make me mad. I'll keep it clear. It would make me mad to buy this and see all this disappear that fast. It's a round trip. This is just a round trip. I'm not going to round trip. I'm not going to be up 100 points, almost 100 points, and see it disappear. So I will take some off into strength, and then I will let the rest work. And when it starts exhibiting weakness, I will take the rest off. And this is one of the best tactics that I will use. Sell into strength, and then if it takes out, like let's suppose we sold some on the way up, and we owned Amazon right here. Let's go back in time. And we owned Amazon right here, which we did. You own Amazon right here. You know what? Takes out the previous day's lows. Goodbye. I'm gone. I'm going to sell it. Why would I do that? Let's take a look at 420. See 420? Here's QQLD on 420. Right there. See that day? At the same time that Amazon's falling, the NASDAQ comp's dropping like a rock. I combine those variables together, and it will tell me to get out of shares and maybe take the rest of it and took out the previous day's lows, take out the rest of my shares. So I'm going to watch the big index or the big index ETF, and I'm going to watch the stock, and I will sell it in 20% increments, knowing darn good and well I'm not going to get the top. It makes it easier. And again, we distinguish, and this is very important, we have to distinguish, are we in this? Are we in this? And when we're in this, we watch closely and hit the road faster. So I hope that helps you. It's a great question. If you have more question about it, ask me and let's go through it deeper. And I thank you.